Hi everyone, this is Paul Stewart here from Elite Wealth Property again. I'm just going to run you through a quick case study dated in June 2024. Like with all things, this is client specific and I've tried to simplify things as best I can. It's to give you a flavour of what we can do for a client. So let's first look at the scenario. Our client wanted to invest into a specific UK property presented to them by their property agent. In this particular case, the purchase price was £5 million. And once purchased, the rent on this investment was going to be generating £450,000 a year. Now, prior to us being involved, the client was expecting everything to end up in a straightforward UK limited company, and for that they would be paying corporate taxes on the rent at 25%. So let's have a look in terms of what we did with the client. The first part of the conversation is to discuss what proportion of the £5 million they wish to put through the tax planning structure and what proportion they'd like to leave outside. This doesn't make any difference to the tax savings on the rent, but it does make a difference on things like inheritance tax and also overall flexibility for the future. So our first part of the conversation is to work out how the client wants to split their capital between inside and outside of the tax planning structure. In this case, we agreed upon £2 million as the amount going through the structure. So the £2 million drops into the QNUPs, which is the qualifying non-UK pension scheme, which is fairly standard. Then the next step is where the secret sauce happens. That money goes into the genuinely diverse commercial vehicle. And now we've got £2 million on the table ready for the purchase, with the remaining £3 million then coming by way of a loan instrument. Now, when we talk about tax structures, everyone seems to think that the end result on the right-hand side is going to be some extremely exotic offshore thing they've never heard of. But no, what ends up happening is that the full amount of the money ends up in a UK limited company registered at Companies House, with the client as the director and the shareholder and the signatory to the bank account. The client can, of course, choose friends or family or anyone in the UK that they wish to undertake that duty for them, but they can do it themselves. Now, it's a special limited company in that it is tax exempt, and that's where the tax savings comes in. It's the genuinely diverse commercial vehicle part that makes that company tax-free. So what are the tax benefits? Let's have a look. So to make it clear, we've got a UK limited company. It's got £5 million in the bank and it's buying a property, and that property is going to generate £450,000 of rent. And the first thing is there's absolutely no tax on the rent, regardless of the tax residency of the investor. So if we were doing business with a UK expat and they moved back to the UK, it would still be tax exempt. So in corporate terms, corporate tax is applicable here. That's £112,500 being saved every year. So over 10 years, that's over £1 million of corporate tax being saved just on the rent, which is pretty awesome. There's also no withholding tax on the loan interest because it's a special loan instrument that's being used. In terms of the £2 million going into the structure, which is IHT exempt, they would have saved an immediate £800,000 in inheritance tax. And in addition, there's no tax on the future sale of the property. So assuming corporate tax rates are going to be 25% in the future, that's 25% of whatever gain that the property makes. If it's turned into flats, for example, and it has a massive uplift in value, that's a huge tax saving. And this is quite important where people are buying property and they want to actually run a business, because a lot of tax structures like pensions are not allowed to run businesses. They're not allowed to trade, whereas in this case, this particular structure is. So these tax benefits apply irrespective of the tax residency of the client, and also irrespective of whether they want to make long-term investments or whether they want to actually buy and flip and do property development. So everything that happens is down to the detail of what the client wants to do and how they want to structure things. So please feel free to book a call. More than happy to talk. If you are a wealth manager or a property investor or indeed a property agent looking after clients who are buying properties in the UK, more than happy to talk with you. I hope this has been of some use. It's just a real quick run through. Thank you for your time. My name is Paul Stewart, and goodbye for now.